Hello everyone, welcome to Management Accounting class. Today we are going to start with the third unit of Management Accounting, that is Financial Ratio Analysis. Okay, as we all of us know that the financial statements like profit and loss account, balance sheet, they disclose only trading results of the firm, that is the profitability position of the firm as well as financial position of a firm for a particular period. And these statements, they fail to give full and clear picture of the financial position of a firm. Okay, the details of financial position may fail to disclose by these statements, and therefore there is a need of applying one such tool or certain tools for assessing the accurate financial health of a firm. And ratio analysis is considered as one of the powerful tool which is applied for measuring financial soundness and performance of a firm. Okay, now let us understand what do you mean by the ratio. The term ratio refers to one number expressed in terms of another. Okay, or in other words, we can also understand ratio as it is the mathematical expression of the relationship between two or more related numbers, or the relationship of one item to another expressed in a simple mathematical form is known as the ratio. Okay, so relation between two related number or two or more related number is called as a ratio. Okay, now what do you mean by financial ratio? As I said, financial ratio is considered as one of the important tool or powerful tool which is used for measuring the financial soundness and performance of a firm. Okay, now let us understand what you mean by financial or accounting ratios. Okay, the ratios which is used to describe significant relationship between two or more related items of financial statements are called as accounting ratios. Okay, so mathematical expression of the relation between one item of financial statement with the another item of financial statement is called as accounting ratio or financial ratio. For example, suppose we want to find out the ratio between current assets and current liability. Okay, we want to compare current assets with current liability. So we have one ratio called as liquidity ratio, which will give us the relationship between current assets and current liabilities. Okay, the information regarding current assets and current liabilities, what is the position, whether current assets are sufficient to repay the current liabilities or no, that we will get to know with the help of liquidity ratio. So in this way we can have the relationship between the various items of financial statement to analyze the accurate financial position of the business, the financial soundness and health of the business firm, by which with the help of these ratios we can forecast the activities of a business organization. We can frame policies, we can prepare the strategies based on the ratio analysis done on the financial statements. Okay. Now there are various mode of expressing the ratios. Okay, ratio can be expressed in three ways. Okay, there are three ways to express the ratio. First one, time or rate. Second one, percentage, and third one, pure ratios or proportion. Okay, and depending upon which ratio you are calculating, you can use this any of the above mode. Okay, first one is time or rate. When one value is divided by another, the unit is used to express the quotient is termed as time. Okay, now for example, say out of 100 students in a class, 80 are present. Okay, out of 100 students in a class, 80 are present. The attendance ratio can be expressed as, first we have to find out what in meaning what they have said, one value is divided by another. Okay, we want to find out what is the ratio of the present student in the class. Okay, so 80 divided by 100, out of 100, 80 students are present, and what is the ratio? 0.8 times. Now here mode of expression is time or rate, so 0.08 times. Okay, or 0.8 rate is the present student in the class. Okay, now suppose, now we can say it is also called as coefficient. Okay, expression in the form of coefficient, the ratio will be 0.8 times. Okay, next, second one is percentage. If the quotient obtained is multiplied by 100, the unit of expression is termed as percentage. Okay, you all of us know this. For example, the percentage, the same example we are continuing here, by which you will understand. The percentage of total number of students present is student quotient, that is number of students present in the class, 0.8 into 100. Now here we have calculated that the time rate is time or rate is 8 times. Now we have to find out in the form of percentage. Okay, so 80 students were present out of 100, so 80 divided by 100 or 0.8 into 100, which is equal to 80%. Okay, this you can calculate in this way also. 80 divided by 100 into 100. Why into 100? Because we are calculating in the form of percentage. Third one is pure ratios or proportion. Pure ratios or proportions will be arrived at by the simple division to one number by another. Okay. Again, we will be continuing here the same example. Out of 100 students in a class, 80 are present. So therefore, the ratio will be 4:5. Okay. That now here you can check in the meaning. Proportion or pure ratios will be arrived at by dividing by simple division of one number to another. Okay. Now 80 students are present out of 100, so 80 divided by 100 is equal to 8:10, or you can mathematically calculate this and you can simplify, the answer will come 4:5. Okay, so this is called as pure ratio or proportions. Depending upon which ratio you are calculating, you can use any one of the mode of expression. Okay, now let us understand. Now these are the various what we can say mode of expressing the ratio. Now before we understand the classification of ratios or the types of ratio, let us understand what are the need or what is the need for ratio analysis. Why we need to do the ratio analysis? Because ratio analysis serves as an aid to management. It will help the management in the analysis and interpretation of financial statements. There are different parties like investors, creditors, bankers. These are the stakeholders of the firm, and these stakeholders also need the ratio analysis for different purposes, because their decisions will be dependent upon the financial position of the business firm, and these investors, creditors will get to know the details about the accuracy of financial position with the help of ratio analysis. Okay, and these are the various need of ratio analysis we will be discussing one by one. First one is to diagnose the financial health of a business concern. we will be analyzing each and every item of a financial statement with the help of ratio analysis, and with the help of this we can easily diagnose what is the financial health of a business organization, how well the firm is sound enough to repay their long term obligations as well as short term obligations. That we will get to know with the help of ratio analysis. Okay. Second need, to establish relationship between various related items of financial statements. Now for example, as I said in one of the previous example, the ratio between current assets and current liabilities. Okay, now with the help of this liquidity ratio we will get to know there has to be a relation between current assets and current liability. You have to control your current liabilities considering the current assets, because your current assets should be sufficient enough to repay the current liabilities. Current liabilities of the firm should not be more than the current assets. Okay, and this we will get to know when we establish the relation between current assets and current liability. So in this way we can establish relationship between investment to the profit or investment to the sales, and with the help of this relation we can easily diagnose, we can easily understand what is the financial position, profitability position of the business firm. Next one, to have deep insight into the data given in the financial statements for making accurate decisions, as we have got to know a liquidity position with the help of liquidity ratios. In a such a way there are like many such ratios which will gives us the detailed insight about the like efficiency of the firm, then the financial soundness of the firm, solvency position of the firm, profitability position of the firms. So this ratio analysis gives us the insight into the financial position and profitability position of the business firm, by which the whatever decisions we may take based on the financial statements, those decisions will be accurate decisions and the profitable decisions from stakeholders point of view as well as from the company's point of view. Next one, to reveal trends in cost, sales, profit and other related items for forecasting future events. Okay, we can forecast the future events with the help of ratio analysis, because this ratio analysis reveal what is trend in the cost of the goods, then what is the trend in the sales of the firm, like how well the firm is able to maintain the increase in consistency in increasing the sales, consistency in increasing the profitability, and with the help of these ratios we can make the future events more accurately, the forecasting of the events become more profitable. Next one, to control cost for improving profitability of the firm. Okay, with the help of efficiency ratios and solvency ratios we will be able to control the stock of the cost of the product, and that will lead to increasing profitability position of the business concern. Okay, next need is we need to make the ratio analysis to measure the efficiency of an business organization. Okay, so how well the firm is efficient, how efficiently the firm is managing their assets, managing their investment, that we will get to know with the help of efficiency ratios. There are n number of efficiency ratios, for example say fixed asset turnover, working capital turnover ratio, debtors turnover ratio, creditors turnover ratio. So these ratios will make us understand the efficiency level of the business organization. Okay, next one, ratio analysis facilitate inter-firm comparison. Suppose if you want to make the comparison with the another firm, then that is possible with the help of ratio analysis. Okay, you can compare in the form of liquidity position with the other firm, you can compare the solvency position of the firm with the another firm. You can compare efficiency level of your business organization with the other firm. You can also compare profitability position of your business firm with the another firm. Okay, and the next one, last need is to help the creditors, investors, bankers in making profitable investment decisions. Okay, so these are the stakeholders whose money is involved or invested in the business organization. So therefore they does the detailed ratio analysis, by which whatever decisions in regarding investment they does, those investment will be profitable decisions for the investors, for the creditors, as well as for the bankers. Okay, so these are the need or objectives of doing the financial ratio analysis. Okay, in the next class we will understand the types of ratio or the classification of ratio, and then we'll solve the practical problems on those ratios, by which even you will understand how the ratios will help us to find out or to measure the accuracy of the financial position of the firm, and how well we can make our decision meaningful or a decision beneficial from the stakeholders point of view as well as from the company's point of view with the help of ratio analysis. Okay, I hope you have cleared with the meaning of ratios and accounting ratio. Okay, thank you.